Hey, good morning, everybody. It's Friday. Everybody lucky, last Friday of July. And so be interesting how the markets kind of come out today. But I want to thank you for joining us and apologize that we weren't here yesterday. Had a little technical difficulties with our computer. So I had to bail kind of the last minute, left Dave hanging, and apologize for that. But hey, I'm glad you're here with us this morning. I look forward to our discussion today. Hang tight. Dave will be with us in just a few minutes.
5.7 Light FM. Good morning. Hello. So glad you're here today, and I'm so glad it's Friday. It's 8:39. Let's check in on your money and find out what's going on today. Not only do we have the gross domestic product in this country, we also have companies reporting whose total are dang near the gross domestic product of a lot of countries and bigger than a few of them. Let's go downtown to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, you there this morning?
I am, Dave. Hey, I've made a little tweak here and there trying to make sure that this technology doesn't mess us up again, because we missed a great day yesterday on news, and we can't go backwards because there's so much more even today.
Well, that's the problem. And yesterday I didn't have all of the quotes that we had because there were a whole lot of big companies that reported yesterday. And looking at what happened on the market yesterday, it overall didn't look like we were overly impressed by the results. The Dow was down 128 points, NASDAQ off by 82, and the Standard & Poor's down by about 16. This morning we start out with a number that the economy's slowing down. Boy, there's a surprise, just not as much as some of the analysts expected. Second quarter gross domestic product is out.
It is, and it came out at 2.1%. And that is slowing from the first quarter, but you and I both expected that. And now how does that compare to what all the economists out there thought it was going to be? And there's kind of a range that I've seen out there. I've seen some economists were expecting as little as 1.8%. I saw others at 2%. So either way, Dave, 2.1% is better than what most economists were expecting.
And, given all the indications we had, I looked at it when I saw it come across my wire, and I said, okay, it's a full percentage point down from what it was last quarter. But given all the indicators that we had, I was kind of prepared for worse. So, somebody without the research ability of all those big companies and analysts, I think kind of gut instincts for the average investor too is, okay, 2.1, we can live with that for the second quarter.
Absolutely. And of course, obviously the speculation is, how is this going to affect what the Fed does next week? And so that continues to be the big question that everybody's asking is, as the economic data comes in, is it going to influence the Fed at all? Because you and I both know we had some other numbers come in today that were I think probably pretty good and as expected.
Yeah, and that's the thing, and that was what one of my tip sheets was saying about yesterday's dip in the markets. There was some lack of assurance that the Fed was going to drop interest rates, so there was a sellout based upon the difference of strategy on the Fed. One thing that's going to augur against that is, what are the consumers doing? It's a consumer-driven economy, and the first read on consumer spending last quarter, I don't have expectations on that either, but we spent 4.3% more money last quarter than we did before, and that's got to be a pleasant surprise because we drive the economy.
Well, that's true. The more we spend, the better it is for the economy, and that does have to be a good sign. And then we had exports were down about 5.2 from last time, and that would be expected given that we've seen this, all the tariffs being put on. We would expect our exports to decline, but yet our imports are up about 0.1%, which I'm thinking it's probably not a bad number, again, given that we've got these tariffs that we keep dealing with.
Well, I lay that up against the consumer spending increase, too, and the imports only up 0.1%. It says we were primarily buying domestically, and that's got to be good news for the economy overall.
Absolutely. Hey, the other thing we talked about yesterday being a kind of a down day, and unfortunately we didn't get to talk about it, but as I started yesterday, we had two sectors that were getting hit pretty hard yesterday. Automobile with the Ford and Tesla both missing their numbers.
Hmm.
Southwest and American Airlines both reporting struggling with the 737 MAX issue and having to ground those. And so I think all of those two industries really probably weighed heavy on the indexes yesterday.
Yeah, understood. And I did notice it did have a bigger effect on the Dow percentage-wise than it did on the others. So that kind of is a 2+2 makes 4 situation. Turning around into today, I kind of flippantly said that we're talking about our gross domestic product. Well, we got some companies involved that are bigger than the gross domestic product of a whole lot of countries put together. And lead dog among the bunch, I gather from looking at my leader list this morning that Google kicked butt, didn't they?
Google did. Alphabet is the holding company for Google. They came in at $14.21 a share for the second quarter, well above what was expected. I mean, they were expected to come in at $11.30 a share. So that was a huge beat. They keep continuing to be the dominant search engine when it comes to the internet, and they're up 8.3% this morning before we get started.
Yeah, they stock 2 different classes of stock that are out there, and both of them are just absolutely kicking booty up better than 8% this morning. That good news, now we put that up against Amazon, and they just finished Prime Day. They reported as well. How were they?
Well, let's remember Prime Day was in July, so it
Uh-huh.
won't be included in this quarterly report. But they missed. They missed
Ooh.
by about 25 cents a share. And you have to realize this is the first time in 5 quarters that Amazon did not post a record profit. Um, and so what's the deal? I mean, they did beat on revenue. It's just the bottom line didn't. And that was because shipping costs have escalated over the last quarter. And so that's giving them some pause there. And they're trading down 1.34% after being down 1.3% yesterday. So that's 2 days combined. They'll be down about 2.7%, getting close to 3%.
You know, when we talk about Amazon missing a profit projection, I just got to sit back and think, wasn't that many years ago that we were going, holy crud, Amazon made a profit. What a shock. Now all of a sudden we're expecting them to behave like a normal company.
You're right.
My, how the world changes in not much time, right?
Yeah, I can remember talking about how's this company ever going to be worth anything because it never made money. It was always losing money, profusely losing money. And now all of a sudden, it's kicked in and it's kicking butt across all the retailers.
Understood. A bunch of other tech-related stocks reported as well. Before we get into some consumer goods, any indications that we got Google kicking butt and Amazon missing by a little bit? Can we establish a trend with anybody else in that sector?
Well, let's talk about President Trump's favorite thing, Twitter.
Sure,
Right?
yes.
So Twitter came in, they beat by a penny a share. Revenue exceeded the estimates as well. And so they were able to monetize 139 million daily users. I think
Wow.
that's a pretty big number when we look at that. And so they're trading up this morning 7%. That's a pretty big chunk for them.
That when President Trump leaves office, regardless of whether it's next year or 4 years hence, they got to hire him for a spokesman.
Yeah, exactly.
Nothing like a traffic increase from the chief executive officer of the country. Other stocks of import this morning.
We do. We got Intel, another tech company. Some news on them that's going to happen here in the near future is Apple is going to buy Intel's smartphone modem chip for about $1
Oh,
billion. Now, that's obviously not in this number because that deal hasn't even closed. It just reached the deal. But they did report, and they beat the estimates by 17 cents a share. They actually saw an increase in revenue by 1% from desktops, traditional PC business, which they were expected they expected that line to decline. And they raised their full year guidance as we get ready to start today. So they're up about 4.2% this morning.
I suppose you got to replace a desktop, even though they may not be selling a lot of new ones. At the very least, we're replacing ones because we still can't live without the doggone things, right?
But exactly. I mean, you got to have them. I got them all over my office. So Uh,
Complete aside, I got to mention that if Intel's cell phone chip is going to be going into Apple before too terribly long, this is a curveball because neither of us have it in front of us. I got to believe Qualcomm stock is tanking off of that.
that could be you're right, because that's who's
Yep.
currently the provider.
Absolutely. We got into the toy industry, and God got it all. We were wrong the other day. Generally, when Hasbro kicks butt, Mattel ends up losing. It's not a zero-sum game anymore, I gather.
Well, I wouldn't quite go that far, Dave, because Mattel did not show a profit this quarter. They lost 25 cents a share. However, that was much better than the 40 cents a share that was expected by Wall Street. And revenue was above what was estimated. So they continue to be keeping themselves in there. They're up almost 6.5% this morning to $13.31 a share.
All righty. And you mentioned that in your line of work, there was a major merger and acquisition taking place that we probably need to make mention of as well. Among the financial advice and brokerage firms, Charles Schwab bought a household name, didn't they?
They did. And this really surprised me, Dave, is that Charles Schwab is buying out USAA Investment Management Company for $1.8 billion. So I'm kind of curious to see how that really plays down the line, because all the folks that I know that deal with USAA have, they have high bars. And not that Charles Schwab doesn't, but USAA treats those folks so well. I just believe that it's going to be hard for Charles Schwab to keep that customer service at the same level that USAA did.
And that's going to be the interesting part, because, USAA, both on their insurance and on their investment portfolio, they're famous for service. They're more of a membership company than they are a commercial concern in terms of their behavior. So it's going to be interesting to see what their customer reaction is when the members of that portfolio end up saying, oh, we've been sold, have we?
Exactly. And it's going to be interesting to talk, because I have some clients that actually have accounts at USAA. And so it's going to be interesting over the next, I'm not sure exactly. It won't close until 2020. So it'll be interesting next year when we sit down for reviews and stuff to have that conversation to see how that transition worked and what's the customer service like over there.
Understood. Rolling this all into a great big ball, resetting the table for yesterday. It was an off day yesterday, 45 minutes before we open up this morning, Phillip. Are we turning the corner and turning green?
Dave, I'm going to tell you one more thing before I do that. Okay. Starbucks. Everybody loves Starbucks. Starbucks came out 6 cents above estimates. So they're trading up 6.5% this morning. Good deal there. So all the indexes are green. I mean, it's a green across the board. No matter what you're looking at, it's green today. The Dow's up 67 points. The S&P is up 6 3/4. The Nasdaq's up 21. So all of those are up about 1/4%. Gold's up just a tad. Silver's up a tad. Crude oil, the one we don't like to see going up, is going up. It's at $56.42 a barrel. That's up 0.7% from close.
All right, and the yields are going up a little bit on the federal bonds as well after the GDP number this morning. World markets, the Asian Rim over trade concerns, they generally were off this morning at the close. European markets, there's a Boris bounce going on. They're all green ink this morning, midway through their trading day. Phillip, somebody needs some advice to be able to figure out what to do with their retirement accounts and follow who owns my portfolio, too. How do I get a hold of you to make an appointment?
Hey, David, give us a call at 382-0037 to schedule a financial x-ray analysis of the current portfolio. Let me mention this. Next Thursday, we're going to have a lunch and learn and then after work and learn on 4 myths of long-term care. I'm getting a lot of phone calls from clients and parents of clients that are concerned about long-term care. And so we decided to kind of put this little educational thing together. And then we've always got our free report on market corrections. Text the word market to 863-285-3815. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings.
All righty, right on WWTK News Talk 7:30 a.m. Phillip, thank you so much. You have a marvelous weekend. We'll see you Monday, all right?
All right, buddy. Thanks.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be?
Hey, folks, we had a wealth of information today, a lot of stuff out there. This week has been a crazy week of earnings season. But I do want to remind you that, there's some analysts come out there really starting to talk hard about a market correction. And so I want to make sure you're prepared. And so we've got our free report back up there on understanding market corrections. All you have to do is text the word market to 863-285-3815 on Facebook. Click the link right above this video. Take you right to the page to get yours. Take care. Have a great weekend. I look forward to seeing you again on Monday.